If you open YouTube today, you'll see thousands of videos saying one thing: start trading and make money every day. But on the other side, you'll see investors saying something completely different. Just invest and hold for the long term. So who is actually right? Trading or investing? And more importantly, which one should you choose? Let's break it down. Part 1. What is trading? Trading is simple. You buy a stock and sell it quickly for profit, sometimes within minutes, sometimes within hours, sometimes within a few days. The goal is simple: buy low, sell high, fast. Traders try to profit from short-term price movements. They analyze things like charts, patterns, indicators, market momentum. For example, a trader may buy a stock in the morning and sell it in the evening for a small profit. Sounds easy, right? But here's the problem. Most traders lose money. Studies show that around 80 to 90% of traders fail. Why? Because trading requires extreme discipline, deep market knowledge, emotional control. One bad decision can wipe out weeks of profit. Part 2. What is investing? Investing works very differently. Instead of focusing on short-term price movements, investors focus on long-term growth. They buy shares of strong companies and hold them for years, sometimes even decades. The idea is simple. Find good companies, buy them, and let time grow your money. For example, if someone invested in companies like Apple, Amazon, Microsoft 10 to 20 years ago, their investment would be worth many times more today. That's the power of long-term investing. Comment below for part 3.